have done 178 webinars in last 4 years with more than 1,24,000 participants registered. And we have done on various topics, the corporate law, SEBI law, insider trading, valuation, M&A, and so many others. Now, today's program is very interesting and we are seeing market is going up and the IPO market is also booming. And this is the first time which is happening. Then people are investing in IPO market without seeing anything, just seeing the market position that every issue is coming out and it is going on premium. So they are investing. They're not seeing fundamental, they're not seeing anything and what it is happening. So when we talk about the IPO, it represents the moment in the company. And when the company share is going for list first time, then we use this term IPO. And there are only main board IPOs, but now the SME board is there. And they are catering the need of small business. And that is the basic purpose. And this market of SME market is also now having a sizable number of companies in both BSE as well as NSE. The main board serve as a primary trading venue for large, well-established companies with a proven track record of financial performance and the significant market capitalization, because they are on the bigger size. I'm not talking about the old companies which are listed on BSE and NSE when the rule was not there of some specific criteria. But now onward, if you see in last 5 to 6, 7 years, that big companies and the big issues are coming in IPO market. But the most advantageous thing is happening that this particular aspects or market gives you visibility, liquidity, and broader access to diverse investor space because you have a multiple investor. But if we compare with this SME, then it is smaller and majority companies are growing. And there is one more trend which we are seeing now, that so many startup companies which are depending upon the PE fund, they are also going in the SME market because the requirement is limited. Compliance is also not very great as compared to the main board, and simultaneously future compliance is also less. So they have more flexibility, operational flexibility. Their compliance cost is less, and they access the investor which are small, expertise in smaller capitalization entities. So today when we evaluating between the two options, companies must they consider several criteria, because big company has to go to the big main board and the small company has to come to this. But when they decide the performance, financial metrics, growth potential, demand of industry, regulatory requisites, these are the things which are connected. Main board IPO is costly, small, but the MSME IPO is less costly, and their requirement of compliance and other things is also less. So today we have this webinar, and in this webinar we want to discuss various aspects on why IPO eligibility criteria for main board and SME board. Now this is one where you have understood the criteria. But what are the prerequisites to readiness, the IPO assessment and essential steps we will discuss today. Financial analysis of IPO preparation we will talk. Corporate structuring and strategy for IPO, because when you have a company and when you are going to the market, you cannot go just like without preparation, without the clarity on the structure. You may be having a subsidiary company, you are having a business in group, business in other companies also. You have to have a corporate structuring for IPO purpose. Sometime investor is not investing money if you have a same type of company in the same group. So they have a doubt that tomorrow you can transfer that business to other company. So that's why you require a corporate structuring. Importance of strong corporate governance. Today you are doing business alone, but tomorrow when you are going to public, your governance system should be very strong. You have to do the due diligence process before going to IPO. Your due diligence, your compliance level, everything should be in streamline and in the process. Overviewing IPO process for main board and SME board. That is another aspects we'll discuss. Post IPO, that is also very, very important, because you should not become Abhimanyu, that you have entered into Chakravyuh, but you don't know how to come out. So sometime IPO market is also a Chakravyuh. So you have just seen the greener side, but you are not understanding when you are going and raising money, which is not costing today, then it has some cost for other aspects also. Like you have to disclose, you have to comply, you have to timely compliance, various things you have to do. So you should not do these mistakes. And then what are the critical issues involved in IPO process? So today we will discuss all these points. Now for today's program, we have invited very learned speakers on this from the stock exchange. Now I welcome Mr. Lokesh Bhandari. He is just joining. He is Associate Vice President Listing Approval at NSE. He has worked experience in NSE around 1 decade, where he had been part of the entire listing department, both listing approval, listing compliances. Further, he is also closely working with various SEBI team and actively discussing with the various regulatory framework. I welcome Lokesh for this program. Then we have Mr. Sachin Jain. He's a General Manager, Listing Compliance and BSC. Before joining BSC, he was in Paytm Payment Bank, Just Dial Limited in Atlanta. He has more than 22 years experience in statutory compliance, corporate compliance, and rich exposure in corporate law, SEBI law, IPO, and diligence. When I was seeing Sachin's profile, I was just thinking that today what is happening, the regulator is going to the market, but after a long time, I'm seeing a private sector person is going to the regulatory side. That's a good sign, and it's a good. So welcome, Sachin, for this. Your experience of corporate and the pain of the corporate will also you will realize when you will work as a listing compliance in Bombay Stock Exchange. Welcome, Sachin. And then we have Anjali Agarwal, Partner Head, Capital Market Service, Corporate Profession. And Manoj Kumar, Partner Head, M&A and Transaction, Corporate Profession. And Ruchika Sharma, Associate Partner, Corporate Professional. So I welcome all my 5 speakers, those who will discuss today on various aspects. So the program structure will be like this. I'll give presentation initial about the numbers, and then Manoj, Anjali, and Richika will tell the IPO planning process and other thing. Then Lokesh and Sachin will discuss about the regulatory side. And I will request Sachin and Lokesh that they should tell companies that what is the problem when somebody is applying they are facing, because they are not coming fully prepared. What are the issues when the things are going taking time, and the advice to the industry of future IPO aspirant that we will discuss. So friends, now before giving this IPO market thought, I have just prepared a small presentation so I can share the number that what is the why is the IPO journey and key steps and strategic decision which we have to take. So now first is that equity culture in India, or I should say equity cult in India, is becoming bigger and bigger. Now you can see first of all, Indian economy is changing. Then financial education, technological advancement, because now you can open any account, you can trade seamlessly. You can transfer your shares, you can transfer your fund, you have available fund also. So many things are happening, and regulatory framework is also favoring to create equity culture. This is one reason. Second is the number of demat account is surging. 32% year on a year, that is a growth. Today, we have reached to 15 crore in March 2024 compared to 11 crore in 23. So you can compare 4 crore new accounts has added into this. So this is phenomenal growth is happening. In March 2024 alone, 3 crore new demat account open. This is 30 lakhs new demat account was opened in March itself. So this you can understand how much increase in investors participation is going up. Total market capitalization of all listed companies in Indian stock exchange is $5 trillion. And with the latest $1 trillion has come in just last 6 months. So you can understand that how the investors are chasing the equity and market is going up. Then equity segment is daily average turnover increase 4.5 times from 17,818 crore to in 2015 to 81,724 crore in 24. So you can understand that how much trading is going up and up. So this is another aspect which is giving. Now IPO market, we all are know what is IPO market, but there are certain things. IPO market is a process of raising capital from public. It is not giving burden to the financial institution, banks, and the government. The public, which is highest investment ratio, saving ratio in the world, 33% India has, they are putting money from that side. And sometimes this money is lying ideal also in a cash format, in the format of gold, in the format of the bank or an FD. Now this money is not coming in the some equity creation or some development. So by this way, this money is coming in the market. It is one of the better factor, and this is a cyclical factor which is taking shape. Now in IPO, company raise fund from public for growth and expansion. IPO process involve preparation, marketing, pricing, launching, or listing shares of the stock in the stock exchange. Companies face volatility, increased regulatory scrutiny, substantial costs associated with IPO, which I just told you. It's a Chakravyuh. So you should know how to open. You should be like Arjun, not Abhimanyu. So those who are Arjun, they are successful in the market and they are the winner. Going public enhance the company's credibility, because any company which is listed and any company which is unlisted, it has a different perception in the market, banker, institution, or any other people. Market presence and brand recognition is another aspect which is taking place. And friends, IPO provides a platform to establish market presence, enhance visibility, and attract investment of sustained growth. So here the most important thing which is happening, the one more important aspects today, you have to do marketing or you have to do something and you have to spend money to create your visibility in the market. It's a costly. But if you are bringing about IPO in one shot, you are focusing on an IPO market. One another aspect is your company's visibility is going national and international in one go through these aspects. So this is the IPO market, and that's why it has so many hidden advantages when you are, other than bringing money, credibility, and your brand recognition. Next is the benefit of IPO is for company, because one is a value unlock. You have a profit, you have a turnover, so you are selling in the that same boat. But if it is going in the market, then you are getting the valuation, and valuation is always 10 times of your PAT or EBITDA, whatever it is, on that basis. Then fundraising, you can do the capital market. Fundraising is not only one time, multiple time. If you are giving good return to the investor, investor will also take you to the new height. You can access the institutional investor, which is another segment totally is going to the listed company. Then you have a higher credibility, which I have told you. Liquidity of company shares, you can buy anytime, you can sell. Any investor is investing money in your company, he can just take advantage and see this. Then less dependency on loan, because you are not, because loan, to get a loan is no doubt it's a good thing, because it's also enhance your credibility that bank is giving loan, but this is normal. But sometimes your business is like this, that bank is not comfortable. So market is always comfortable to take the futuristic shares that way they want to do. Next. Now, benefit for promoter, they can unlock value, liquidity for minor dilution of stakes by the promoter, then increase promoters branding because they are listed. So listed promoter, non-listed promoter, two different things. Wealth creation for the promoter, they have an exit opportunity also. This is the advantage to promoter, because if you are not discussing all the promoters' advantage, they will not come, because so many company are good company, but they don't want to go to the public because of certain things. Next is the advantage to the employee. Shivam, next. So employee, one is the employees also offering IPO shares at discount they can get, and they can get a differential price. And then the bond and incentivize people through long-term incentive plan, that is a ESOP. Unlisted companies also giving ESOP, but they promise the buyback. But here you can go for ESOP, and the companies listed companies ESOP is always a liquid, you can sell. And then brand of the company is higher, the employees also feel elevated. Now, what are the steps? Because what is happening, the promoters and other people are enhancing equity culture is increasing because of the regulatory framework. The introduction of accredited investor framework, the regulator is doing. Reforms in mutual fund regulation, that is also that you should not charge more. ETF is coming, that is also a form of mutual fund, it's a different way. Then framework or written InvIT is also there. Enhanced disclosure and governance standard is increasing. Facilitation of easy listing and fundraising, that is also because SEBI, if you see, earlier listing was 15 days, 20 days, and there was no ASVA. You are depositing money and it's blocked for the 15 days. Now money is not blocked, ASVA is there. So you can take advantage, and this is also easy way. That's why more and more investors are coming, because your fund is in a bank, not taken by anybody, and you are getting whatever advantage you are getting not other person. Promotion of investor education and awareness, that is also stock exchange SEBI is doing. And then use of technology and digital initiative, which I have told you, it is happening. You can trade, you can do this. Multiple stock exchanges are there, multiple brokers are there, and everybody is working out something new every day. And after that, if I can just give you some number. So you can see the IPO trend, total number of IPO in main board, 2021 we came out 63, 22 640, and then 58 in 23, and till now 38 issue has come, and this is only July month, 6 months are more. So I'm just expecting that it will cross the last 5-year thing. Then in SME also, 51, 59 in 21, 109 it has come in 22, 120, 182 in 23, and this figure is not 11. This is I think this figure is wrong. The 24 we have come out more than. Manoj, just check and tell me. Okay, so And then the main board IPO, if you compare main board IPO and the SME IPO, SME IPO is going up and up continuously. So as compared to the main board IPO, this is happening. Next slide. Now, if you see the amount raised, 1,19,000 in 21, 59,000 22, 49,000 and 33,000 in 24. Here, amount is less because SME is 787, 1980, 460. Just compare this, that 21, 1,19,000 was 787. So amount raising is less, a number is increasing in SME because they are coming out small shares. Next. Next is industry-wise main board, that they are industrial product, diversified, hotel, other banks, special chemistry, all these industry, so widely spread industries are there. See the compare with the SME industry-wise things. Shivam, next. Shivam, next. Yeah, SME capital goods is 14, construction is 10, then IT is 8, fast moving consumer is 8. So here is also the spread is there, multiple industries there, multiple things are there, and this is happening. Okay, so the figure which I was saying, there was 118, not 11, 8 was hidden. So that is, you just understand till July 118. So next for the full year, it will go or double, and so many issues are there. 5 main board IPO, if you compare the IPO price, I'm just taking first company, Before Steel, IPO price by 151, listing price by 442, 193% listing gain. Current price 259, 72% down. When IPO came out, it is 16 times, and if you compare 16 times versus the current PE, it is 27 times. So this is an indication that some companies' share price on listing has gone up, and they are maintaining today, and they have gone better from the listing. But some companies has gone down or maintained together. Next, if you see the 5 SME IPO, also the same, 75, this is for Winsol, 75 is a price, 383 was listing, 411% gain was there. Current price is 417, and the gain from IPO, there's a 469, this has gone up. Okay, 9 time IPO multiple and current multiple is 61. So you can just understand 975 versus 456. So this is, sorry, 75 versus 417, 60%. So this is also the same situation. Majority companies IPO gain was there, listing gain was there, but some have maintained better and some of them have not maintained properly. So friend, this is some number which I have shared with you. And with this, I'm just telling everyone that market is bullish, market is going up, 80,000 it has reached, and there is no going back. And the reason is the economic confidence is there, wealth creation is taking place. Those who are earning, they are again investing in the market, and then companies are also creating more business opportunity. Capital raising is also easy. Global recognition is also there because Indian economy is 3 trillion now happening. And GDP growth is taking place, low inflation in India, robust corporate earning is taking place, and sound fiscal policies which are there. So these are the things, and then continuously market reforms are taking place. We have to understand also the overvaluation of the market, and then certain speculative tendency and the manipulation in the market. That is also the certain things which we have to see. But sometimes we surprised that why this high growth and oversubscription is taking place. So the answer is very simple. Economic growth and policy changes are taking place. Investor appetite for higher returns is also going. Today, people are not saying what is the return. What the definition of short term has changed. Previously, it was short term in 1 year, long term mean 3 years. But now short term has reduced to 1 month, and sometime it has reduced to 2 to 3 or 4 5 days. So people have realized this. They want to earn money immediately. Market is more money is coming in the market, and the less equity is there. If you see the mutual fund, continuously, this amount is growing. And amount is not growing in a very small number. It is growing in a very high number. And because of this number is so high, the issue is coming that where to invest. So that's why today less equity and more money is chasing. Now market sentiment is also improved because business is also going on, and performance of past IPO is also good. So only thing is we have to just work out the volatility and risk, market manipulation and compliance issue on overvaluation. Now, rest of the things we'll discuss during the webinar regarding overvaluation, that we'll discuss about the questions answer session. And now I will request first Manoj to give a presentation on this. Before this, I just want to announce our 180th webinar will be held on recommendation of harmonization ICDR and LODR regulation. SEBI has come out a concept paper which is very detailed, and they are changing so many things. So 12th July at 4 o'clock, we will discuss this issue. So over to you, Manoj, for your presentation, then Anjali, then Ruchika.
Thank you very much. Good afternoon, everyone. Today's topic is very, very interesting as well as very important, because interesting, we can see that thousands of people are investing for a small money in many of the SME IPO. Even main board IPOs earlier were getting subscribed by 2-3 times, but now it is sometimes 100 times subscriptions are coming. So clearly that there is huge enthusiasm among the investors towards the IPO and fundraising. So considering this, it becomes very important to understand the nitty-gritties of going public. What is IPO, how it will be managed, what is the right approach for a company to go for IPO, what is the best idea, whether to go for SME board or go directly to the main board, at which stage the company is fit to go to IPO. So those things we will try to discuss during this discussion. We will try to explain the things based on our practical experience and the past records. So let me start my presentation first. So I think so. If we talk about the IPO or fundraising by a corporate, we have to understand that there is a journey. Corporate IPO is the very important milestone in the life persons or a particular investor, but a investor at large. And because they are raising money from investor at large, they have to be much more prepared, because they are becoming a trustee of the public fund. So they should be ready. They should be ready for better governance, better disclosure, transparency, and questioning to their performance. So if they are ready, then it's a fit case for them to go to the public through IPO. So if we generally understand what is the journey of a company and various means of fundraising, equity fundraising, if you are talking about, not the debt one. So if generally when a promoter start the business, when a founder, a person who wants to start a business, they need money, and that money comes from their own sources or friends and relatives. That is called the seed fund. There may be a bit better structured funding, which is called the angel investor. So there are a group of people who want to promote businesses in India, entrepreneurship culture in the society, and they pool their fund and put the money into companies. So that is called the angel investor funding. Next comes when this happens at the idea stage, or the company when it is struggling to start the business. But as the company becomes a bit better and established, their idea is established, they have proven that their idea is a business idea and can be run as a good business venture. Then comes the stage where they can raise funds through venture capital funds. So venture capital funds are taking much more risk because the stage is very early. There is a very high chance of failure of the business, and hence they are called the venture capital funds. And their expectation of return is also much higher than any other investor, because they are taking a lot of risk. The next step in the journey of a corporate is the private equity funds. When the business is stabilized, their growth part is clearly visible, and people can understand where they are going. In that stage, there are various private equity funds who are willing to be part to the growth story of the company, and they put the money. And obviously, over a period of 3 to 5 years, they want the company to come out with IPO so that they can get exit from the business. So the last stage in this life cycle comes the stage of public issue, where the company raises fund from public at large through IPO. Sometimes the investors which have put the money and in the earlier stages of their life cycle would like to take exit from the company, so they go for offer for sale, or a mix of offer for sale and the IPO. So option for listing, if we discuss the advantages of listing, as sir was discussing, there are various advantages of company going to public. It is not only about raising the fund. Sometimes the object is to unlock the value, to create liquidity for the investors or the promoters also. So for that, there may not be a need for going to the listing, going for IPO. There can be other ideas like reverse merger of business into a already existing listed company, or there may be a situation where some demerger can also help to list the company new business, one business segment of a group without going to the public through IPO route. So merger demerger route can be one of the viable process to get listed. However, in that case, there is no immediate fundraising. So if the object is to unlock the value and not to raise fund immediately for the company or for the shareholders or promoter, then reverse merger can be, or demerger of a business from the main company can be one of the good way to get the company listed. This process is lesser stringent than normal IPO process, but it is also regulated. Various regulatory scrutinizes, including if it involves listed company, it is scrutinized by stock exchanges, SEBI, then ROC, official liquidator, income tax, and finally the National Company Law Tribunal having jurisdiction over the company. So the process is time consuming, but a bit lesser obligatory than IPO. If we go for full-fledged IPO, obviously it helps to raise fund. So the process is very, very stringent. If we go for my main board IPO, the timeline is also very much similar to the IPO merger or reverse merger process. But if we go for SME IPO, then obviously the process is much faster than normal IPO, and a bit simpler also, because only scrutiny of stock exchange and disclosure and transparency issues are there. So now if we talk, what are the ways of raising fund through IPO? So there may be fresh issue, which is very common. Company want to raise fund from the market, so they go to public through IPO route. That is called the fresh issue. The other option is that existing share capital is sold in the public at large through offer for sale. So it may be to give liquidity to exit to the existing investor, private equity funds or venture capital funds, or sometime to even the promoters. If the company does not need its own fund for growth, it has sufficient internal accruals to grow as per their plan, but they want public to participate in their growth story, and they want existing promoters or shareholders to get liquidity, they may go for offer for sale. Like we are looking at the recent filing of Hyundai for offer for sale, which is 100% offer for sale, and perhaps will be India's largest public issue which will be for $3 billion fund will be raised in India or for the first time through the IPO, and it is purely offer for sale. There may be a third way where there will be a combination of fresh issue as well as offer for sale. So it is obviously certain parts of the money will be put into the company and rest will go to the promoters. So that combination will also be a possibility. So what is the right time or right way for a company to go to the IPO market? So first and very important part is the healthy business. Unless business is stabilized, unless business process is complete, growth story is very much clear, it is not good idea to go to the public. So healthy business is very important. Though there may be many companies which are loss making and still go to the public for IPO, but that they have to get scrutiny of their business model, and that is why it is advisable to go with healthy businesses, and that will be much easier for company to raise from the fund from the public. Then the growth trajectory, the stagnant business, nobody is interested to put money into. So generally, if you are continuously growing, then it is the right time to go for public issue. Then investor obviously expects return. So maybe dividend track record is one of the way through which you can reward the investors. There may be other modes like giving bonus to the shareholders. However, right now, as we see the trend, there are many companies which are not even giving good IRR and still getting very good response from the public in the IPO market. But this is not a permanent feature. The market would certainly get stabilized over a period of time, and then obviously the investor would expect a return which is better than debt funded return or FD return. So obviously the growth of the wealth or the return coming from the in the form of dividend and bonus should be higher than normal return which can be earned through secured assets like debentures, government bonds, or FD, etc., etc. And then obviously you have to fulfill the eligibility criteria as prescribed by SEBI to go for listing. So if any company is planning to go for listing or come out with the IPO, the first step is to check the readiness of the company. So we generally do this roadmap, and that's why based on the practical experience, we are discussing this. So first of the important thing is we will try to understand the business of the company very in deep. We go to each segment of the business, understand their pros and cons, how they are managing, what are the SOPs, what are the processes they are following. So we will go deep into each segment of the business, understand and see what are the loopholes, what are the good things, what are the issues as compared to others. Then their business model need to be verified and seen to be sustainable over a period of time. It should not be an industry which is in the negative zone, which is going to shut down over a period of time. So that will be another things we have to look into. Then we have to analyze the financials of the company, financial business performance of the company as compared to comparable companies or companies already established in this business segment. And then we will compare, obviously, that the top line growth is similar to the industrial growth. The margins are good or similar to or better than the business segment in which they are working or industry under which they are working. If not, what are the reasons, whether that can be rectified through the fundraising process. All those things will be looked into. Then obviously, it has to be compared with the industry to determine what is the right value for the business. So valuation exercise would happen through the comparable company or comparable transactions of the industry. And then deep discussion would happen relating to the object of the issue. So what is the purpose of fundraising, whether it is for the growth, for working capital requirement, or partly to repay the debt, or maybe sometimes if it is offer for sale to give exit to the existing investor, etc. So each component of the object of the issue need to be discussed in thorough and analyzed before embarking for the IPO journey. The second stage is the structuring. So if the company is closely held, there may be certain things which may not be a problem for closely family members, shareholders. But when we are going to the public at large, there may be hundreds of thousands of shareholders. So they should understand the financial implications, financial structure of the company. So structure has to be well stabilized. Financial structure should be clearly visible. Transparency should be there. There should be no any related party transactions. All those things are very important to be looked into. Then we will look into the capital structure. So generally, if your company is closely held, sometimes it is thinly capitalized. So the bit of capital is, let's say, 1 lakh rupees only, and there is a debt or promoter's contribution in the form of debt for thousands of some crores of rupees. But that structure may not be suitable for IPO. So before that need to be changed. So capital structure need to be changed and made reasonable to the size of the business. There may be multiple entities in the group doing different things, so that structure may not be suitable for the IPO. So like sir was discussing, if group has competing business, then investor may not be comfortable to put money into the company, because there is always a risk that the promoter might transfer the business to closely held companies where they can earn the money, they can earn the benefits of the business. Hence, it is always advisable to consolidate all similar kind of business within one entity, one umbrella entity, and go for the IPO. Then there may be hundreds of shareholders or many shareholders even in closely held companies. So that structure might lead to a lot of disclosure requirements. So it is better to streamline the shareholding structure also. If there is a plan for transfer of shares among the family members or to create a family trust, etc. So those things need to be done even before going to the public. So capital structure need to be rectified. The last one, but very important, is the organization structure. So if the company is going to the public, its governance structure, organization structure should be totally aligned, properly structured. So there should be a board of director. Below that, there should be functional heads or key KMPs like MD, CEO, or whole-time directors who are running the business. And then below that, a CFO, company secretary, head of legal, head of marketing, etc. So the organization structure should be clearly indicative of the operational size of the company. Then comes the stage of the diligence. So deep dive into all aspects like legal, secretarial, and financials are very important to look into. What are the risks? What are the financial risks? What are the legal risks? What are the litigation size of litigations outcome, which might have impact on the business of the company, which might disrupt the business? So financial diligence to understand if there is nothing wrong in the balance sheet structure. So those things would happen in the next stage. And then comes the final stage where the readiness for the IPO happens. So all the changes, all the gap analysis reports will be implemented. So the capital structure would be changed. If the name is not commensurate with the business, name should be aligned. Object clause, articles of association need to be aligned. All those steps would be taken to make the company ready. There may be requirement to appoint some independent directors or strengthen the board structure of the company, and then start the process of hiring other intermediaries besides the lead manager, like legal advisor to the issue, auditor, which is peer reviewed and which can handle the IPO related certifications and compliances. Then other agencies like RTA, registrar and share transfer agent, make the company's shares dematerialize, investor in IRPR agencies to market the issue, create the corporate structure, presentation, investor decks, etc. So those steps will start from there. So before going to the company IPO, it is very important for the company to make their systems and processes, infrastructure ready for IPO. So that is, the systems and processes need to be strengthened. Financial and legal system need to be implemented. All policies should be well documented. And so we will look into those the documents, the policies, written policy, and the actual implementation of the same. Then relating to the financials, it is also important for operating processes of accounting and finance should be robust and should be in compliance with the accounting standards. Then audit and accounting. So generally in the closely held company, there may be auditors which may not be capable enough to handle the listed company's requirement of disclosures and transparency. So obviously legal requirement is to have a peer reviewed auditor, but simply being peer reviewed may not be sufficient. They should be capable of handling the listed company's disclosure requirement or quarterly result requirement in case of main board, and 6 monthly disclosure requirements in case of SME listed companies. Then there may be a need to appoint internal auditor if there is none. So they will continuously, concurrently look into the systems and processes and give comments to the board of directors, because there will be independent directors who would like to understand what systems and processes are there. Then it is also very important to have very good legal and secretarial team, especially the secretarial team's secretarial officers role becomes very important, because as soon as the company gets listed, the company secretary will be called the compliance officer to ensure all listing compliances, all prevention of insider trading related disclosures, etc., has to be managed by him. So he should be capable enough for handling the same. Then a few critical aspects which we need to keep in mind while going to public. So first important aspect is promoters' contribution. So either of the board, whether company going for main board or in SME, if the company has identified promoter, then it is very important. It is mandatory to give at least 20% promoters' contribution in the capital of the cap table of the company. So post-listed share capitals, 20% should be eligible for promoters' contribution, and these shares would remain in lock-in for a certain period. It is different for main board and different for SME. So if the promoters' contribution is less than 20%, then they may take support from FV, foreign venture capital funds, AIFs, etc., which can give support up to 10% maximum. And the promoter shall satisfy the requirements of at least 1 day. If they are not fulfilling this 20% requirement, then before opening the issue, they have to bring money and take the shares to fulfill this requirement. Certain class of shares or securities are not eligible to be counted towards the promoter's contribution. So if the securities acquired during preceding 3 years at a consideration which is not cash consideration and which is not convertible into a consideration which is created through the revaluation of existing asset or capitalization of intangible assets which cannot be valued, which is obviously not existing in the books of the company, or through the bonus issue of revaluation reserves or unrealized profit, those shares are not eligible to be counted towards the promoter's contribution. Similarly, any securities acquired during 1 year prior to the date of IPO, if they are acquired at a price lower than the IPO price, then those securities are also not eligible for IPO. If certain specified security which are placed with the creditor, they cannot be put for lock-in as a promoter's contribution. So these things need to be kept in mind while planning for IPO. If we discuss the lock-in requirement, so obviously it is very important. Generally, post-issue, everyone thinks that the company's share are freely tradable liquid shares, but there are certain lock-in requirement, and those shares are not tradable during this period. So if we talk about the main board IPO, then a minimum promoter's contribution, which is 20% of the expanded capital post-issued capital, would remain in lock-in for 18 months from the date of allotment under the IPO. Besides that minimum contribution, rest of the promoter's shareholding would go for lock-in for a period of 6 months from the date of allotment under the IPO. And all other persons other than the promoter's holding would also go for lock-in for 6 months from the date of IPO. Certain shares like ESOPs or ESOP options held in trust are exempt from this lock-in requirement. So if we go for IPO under SME board, then this requirement becomes a bit stringent. So promoters' contribution of 20% would remain lock-in for 3 years from the date of allotment. Or commercial production, if there is no commencement of commercial production in the company, then at least 3 years from the date of commencement of commercial production by the company. If the excess, and there is excess contribution from the promoters, let's say promoters holding is 80% or 70%, then the this excess contribution would go for 1 year lock-in. All other shareholders pre-IPO shareholding would go into lock-in for a period of 1 year. Exceptions are given that shares allotted to employees would not go for lock-in. ESOPs are not put in lock-in. Equity share held by AIFs or AIFs category 1 and 2 or foreign venture capital funds are also not put under lock-in unless they have contributed to the promoter's contribution. Then there is a concept of pre-IPO placement. So it is very important that sometimes a company before embarking to the IPO goes for taking a small amount from the market from certain venture capital fund or investor HNIs or high net worth family offices, etc. It helps to basically meet the immediate gap. Sometimes IPO timeline is very high, so and there is a need for money, need of money to grow. So that can be fulfilled through this. Further, it will also help to establish the price. So at what price the company is coming out with the IPO. If that price or a bit of discounted price issue is coming, private placement is happening, and the investor is good quality investors, then it will help the public to get attracted to the company's price, and investors would be more happy to put the money at the price at which investors who are willing to take the pre-IPO placement is taking. So pre-IPO placement is always an issue which is discussed at the time of discussion for the IPO. And it is good. Most of the time, it is a good idea to go for pre-IPO placement at a price which is near to the IPO price. Then valuation decision, it is very important at what price the IPO should come. So valuation decision is very, very important. It depends upon various factors. Certain are internal factors like financial performance of the company, business model, USP of the company, strength of the business, experience of the promoter and management, and the future business plan, expansion plans, etc. The external factors are current market scenario, industry outlook, market position, what is the market P going on for the industry P or any other multiple as may be applicable, or recent IPO trend in the industry. So these factors would help to decide at what price issue should come. Then comes the important aspect is the risk factor. So like we all understand that since the SEBI came, or the capital controller of public issues authority gone, there is free for all IPO. There is no restriction, no approval requirement for going to the public. However, SEBI says, or SEBI want to look into the disclosure, quality of disclosure. It should be truthful. All material risk must be clearly disclosed in the offer document, which is DRHP or RHP, which is circulated to the public. So ICDR requires that all internal risk, all external risks should be disclosed in fullest manner, considering the materiality and their impact on the public issue or the company's business. So disclosure is very important. SEBI and stock exchanges only look into the quality of disclosure, and hence it is very important that all the disclosure is made in the crisp and clear manner. Here comes other important aspect is this, while deciding about the size of IPO or fundraise, it is important to understand the object fund allocation. How can we allocate the fund? So if let's say, for example, we are taking 100 crore IPO, and it is a combination of offer for sale of 25 crores and fresh issue of 75 crores. So what is the net proceed? The net proceed is by reducing the offer for sale and issue related expense is called the net proceed, and net proceed need to be allocated in various class or kind of expenditure for which the fund is being raised. So there are 5 different heads under which SEBI or ICDR regulation discuss the possibility of caps. So if we have identified acquisition, so let's say company is planning to acquire a business for which they have already entered into share purchase agreement, then there is no capping, or entire 75 crores can be used for that purpose. So there is no capping in this. Then if there is a capital expenditure requirement for the company, then there is no capping. For working capital requirement, there is no capping. Besides this, if you want to allocate the money for unidentified acquisition, then it cannot be more than 25% of the net proceeds. So, which is for this case, for this example, it will be around 17.5 crores. So similarly, if we are keeping the money without marking for any specific purpose, which is general corporate purpose, then this allocation cannot be more than 25% of the net proceeds. So again, it will be 17.5%. However, again, we have to see that the sum total of the unidentified acquisition and general corporate purpose cannot go beyond 35% of the net proceeds. So we have to keep in mind while planning for IPO and planning for fundraising under the issue. I think broadly I have covered all the important aspect which a company need to take care while planning for IPO. So let Anjali discuss other nitty-gritties relating to the IPO under main board as well as under SME. Thank you very much.
Over to you, Anjali.
Thank you so much, Manoj, for explaining the entire process in such great depths. Good evening, everyone. As I can see from the data as is available on the SEBI site, there have already been 123 SME IPOs during last 6 months, wherein a whopping 4,100 crores of funds have been raised through those IPOs. So we can understand the importance the IPOs are gaining, the momentum these IPOs are gaining, and the type of funds that are being raised, or the equity cult which Pawan sir was talking about in his plenary session. So that is increasing. So one needs to understand. I'll primarily be taking up the SME part of the requirements. So one needs to understand exactly out of all the things which Manoj explained in his presentation, when we talk about a SME IPO, what all the major factors which can make or mar a decision. Let me start my presentation. My screen visible?
Yes.
So when we talk about the NSE emerge, the most important requirements which are there, which have been explained in great length in the ICDR as well, that the post-issue paid-up capital should not be more than 25 crores to be eligible for a SME issue. The company should have been in existence for a period of 3 years. And it should have had EBITDA, positive EBITDA in at least 2 out of 3 financial years. And the net worth should be positive. These are very, very simplistic. These look to be very, very simplistic requirements. But when we talk about actual implementation of these, they have inner parts as well. When we talk about BSC, so 25 crore remains the same, track record of 3 years remains the same, positive EBITDA of 2 out of 3 years remains the same. In case of BSC, the net worth as against being merely positive in NSE, here it talks about net worth of at least 1 crore in 2 preceding financial years, and likewise net tangible assets of at least 3 crores in preceding preceding full financial year. Apart from that, it talks about the leverage ratio not to be more than 3:1. If there has been a change in name of the company, at least 50% of the revenue should be from the activities suggested by the new name. Net tangible assets I have already covered. Now, these are purely the vanilla requirements which are there as per the law. But apart from that, one has to see various other components while deciding a IPO, as in what type of security we want to issue, whether we want to issue equity or equity with CCDs or equity with warrants, or we want to come out with a partly paid up share or a fully paid up share. Those requirements are needed to be looked into. One has to see whether we have ample promoters contribution, as Manoj was saying, minimum 20%. There should not be any securities which will not fall within the ambit of minimum promoters contribution. Those things have to be looked into. These are the important requirements. Some of the general conditions which are there for main board as well as SME board. And we have to take the in principle approval. We have to appoint various intermediaries. Agreements with the depositories have to be there. Entire pre-holding of the has to be in demat form. Existing partly paid up equity shares have to be made fully paid up, or the amounts have to be forfeited. There should be firm arrangement of at least 75%. General corporate purposes, Manoj has already covered. It cannot be more than 25% of the issue size. Then a very important aspect comes once everything is decided. Once we decide that, okay, we'll go ahead with a fixed price issue or a book built issue, we have to see how the issue will be allocated between the retail investor or a QIP or a anchor investor. In case of a book built issue, out of the net offer to the public, at least 35% has to be offered to the retail individual investors. I'll try to explain it with the help of some quantified example. Then 15%, not less than 15%, is to be offered to non-individual investors. And at least not more than 50% is to be offered to QIBs. Out of this QIB category, 60% of this QIB category is to be given to the anchor. Now, this is a mandatory portion wherein in case of a book built issue, anchor investor has to be there. And out of the 50% of the QIBs, 5% is to be allocated to the mutual funds. This is only allocation mandate. Allotment is not mandatory. We have to keep in mind. And with regard to the first two categories, that is retail investors and non-institutional investors, if any of the categories, there is a deficit in any of the categories, it may be offered in the next category. So spillover is allowed. But when we talk about QIBs or anchor, spillover is not allowed. So if we try to give this by way of an example and taking a very, very simple issue size of, say, 1 crore 1 crore to be the issue size. So 5% of it has to be given to the market maker mandatorily. So 5%, 5 lakh is gone. We are left with 95 lakh of shares that is the net offer to the public. So out of this 95 lakh, 35 lakh is to be offered to the retail individual investors, which would be approximately 33 lakh 25,000 shares. Then 15% is to be given to non-institutional investors, which is 14 lakh 25,000 of 95 lakh. Then 50% of 95 lakh, that is 47 lakh 50,000, is to be offered to the QIBs. And 60% of this 47 lakh 50,000, that is 28 lakh 50,000, would be allotted to the anchor investors. So this is how the entire allocation takes place in case of a book built issue. In case of a fixed price issue, comparatively, this allocation is much simpler. Not less than 50% to be offered to retail individual investors and balance to be given to any individual other than retail individual investors, and anything left out to other investors, irrespective of the number of specified securities applied for. This is a very important aspect in any IPO, in any SME IPO, because one has to, at the time of allotment, the RTA has to look into these things, and then only the final allotment and final numbers are decided. Whatever we may say that the issue has been oversubscribed by 250 times, but allotment will happen only on the basis of this allocation. There is certain reservation which is allowed in case of SME IPOs. For employees, reservation is allowed to the extent of 5% of the post-issue capital. This is subject to certain conditions, that the value of the allotment to a particular employee should not exceed 2 lakh rupees. In case the issue remains undersubscribed, then there can be on a proportionate basis, the allotment being made can be more than 2 lakh rupees. And there can be a discount as well, which cannot be more than 10% of the issue price. Likewise, to the shareholders of the listed subsidiaries or listed promoter companies, there is a reservation which is allowed, which is not exceeding 10% of the issue size. And again, discount cannot be more than 10%. One thing which I missed to mention in the previous slide, there are lock-in requirements, as Manoj also said. For rest of the categories, Manoj had explained in his presentation, but the anchor portion that is allotted in case of a book-built issue, there is a lock-in for them of 30 days and 90 days. That is 50-50. Whatever numbers have been allotted to the anchors, 50% of it remains in lock-in for a period of 90 days and 50% of it remains in lock-in for a period of 30 days. Lot size is a very important aspect when we talk about SME IPO. Since the minimum application size is 1 lakh rupee, so these lot sizes have been determined on the basis of the issue price. So if the issue price is, I'll take the fourth slab of it. If the issue price is between 25 to 35 rupees, so the lot size would be 4,000. So 4,000 into 25, 1 lakh. That is the minimum application I have to make. And likewise, if the issue price is 1,000 rupees and above, so 1 lakh divided by 1,000, 100 would be the lot size. So the very migration to the main board, the very purpose, one of the main purposes that whenever one comes out with an IPO on the SME exchange, the dream that the promoter or the management sees is the main board. Migration to the main board, how is it possible? Is it a simple process, or one has to do major shuffling therein? So the broad parameters is the paid up capital should not be less than 10 crore, and it should not be less than 10 crore. Market capitalization should be at least 25 crores. Promoter holding should be at least 20 crores. There should be EBITDA positive in 2 out of last 3 financial years. The company should have had positive PAT as per the immediately preceding financial year. Net worth should be at least 15 crores for 2 preceding full years. Listing 3 years has to be mandatory, and minimum number of public shareholders should be 250. Again, these are the vanilla parameters. There are inherent provisions, inherent things which are needed to be looked into, which exchanges look into before granting. They do a complete diligence, I should say, while giving any of the migration approvals. They look into the way IPO is looked into, if not to that extent, but yes, to quite an extent, exchanges look into the company and its performance and how compliant it has been at the SME exchange, and then only they give the approvals. NSE, again, capital should be at least 10 crore. Market capitalization not less than 25 crores. EBITDA in positive EBITDA in each of the 3 preceding financial years. Positive PAT in the immediately preceding financial year. Net worth of 75 crores as per the latest audited financials. This was not there. This is not there in BSE, but NSE asks for this condition. Then listing track record. And at NSE, the minimum public shareholders should be 1,000 as against 250 at BSE. So when one has to migrate to the NSE main board, there are many more other implications, many more other compliances which the company has to look into. These were some of the important points from my side to be looked into for a SME IPO whenever a company is planning for a SME IPO.
Thank you, Anjali.
Yeah,
Thank
over
you.
to Ruchika.
Ruchika, you have to be quick because we are overshooting time and we have to listen to Sachin and Lokesh also. So very quickly, you just sum up the content of the DRHP in very minimal time.
Sure, sir. Thank you. Good evening, everyone, and thank you, sir, for allowing me this opportunity. Hope my screen is visible.
Yeah.
Okay. So, going public is a detailed process, as we all know, as has been summed up by Sir Manoj Sir and Anjali ma'am. So, it is very much important to, first of all, check all the points, the eligibility, the pre-IPO preparedness plan, which has been shared by the co-speaker Manoj Sir previously. But once you are through with all the process, then it becomes very much important that who all intermediaries you will be appointing, because those would be the guiding agencies who will guide you through the entire process, and those would be crucial for your smooth and streamlining process of the IPO. So the intermediaries which are appointed in each of the issue is, firstly you have to appoint the lead managers, the merchant bankers. In SME issue we have seen that generally only one merchant bankers do the lead management of the issue, but in main board IPOs, there can be two or more, depending upon the fund raised and the size of the issue. Then comes the statutory auditor firm or the Ind AS firm. So, when you go for SME issue, you have to restate the financials for last 3 years. And for those restatement, you need to have the statutory auditor firm. Also, there are a lot of certificates which need to be filed with the DRHP, with the stock exchanges or SEBI, and for that, statutory audit firm is essential. For main board cases, the conversion from your financial conversion of your financials to Ind AS is essential. So Ind AS audit firm is very much essential for those closely held companies to be appointed at that stage. Then comes the law firm, the legal counsel, who do the diligence of the company for last 3 years, and on the basis of those diligence, you prepare your risk factors, you highlight all the risks which are there in the company, you do and take the corrective steps for correction of the non-compliances. Then comes the industry report preparation agencies. We have not seen many industry report preparation agencies in SME cases, but in main board, yes, the reports are very much crucial, and thus the agencies have been appointed. Then the RTA, investor relation and public agency, cash escrow, sponsored banker, all these agencies are appointed. So I will not touch upon all the agencies as I have less time, but these are the crucial agencies which should be appointed on right time to go for IPO and to plan your IPO in a right manner. Then comes the I will touch upon the disclosures which are essential in the DRHP. So as per Schedule 6 of ICDR regulations, the index says that following disclosures need to be given in the DRHP, which includes the general section, the summary of offer document, risk factors, as we have touched upon, the introduction about the company, which captures the capital structure, objects of the issue, basis of issue pricing, other general information. Then the information about the company, which covers the history and major corporate events, the information about promoters, management, industry and business overview, because as in when any investor plans to invest in an issue, they see effectively, as far as my experiences, they see effectively two things: in what business the company is and what are the historical financials. So this becomes very much crucial. Then the financial information restatement of last 3 years, and if you're filing in mid of the year, then the financial should not be older than more than 6 months. And then the legal and other information covering the outstanding litigation, material developments, various government and other approvals disclosures. So all these things forms part of the DRHP as per Schedule 6. And even if you are going for SME issue or you are going for main board issue, in both the cases, you have to prepare the DRHP on the basis of this detailed index or the chapter which is there in ICDR. I would slightly touch upon some of the key chapters. Like first is the history and corporate structure. So whenever in SME cases, we have seen that the companies are not very much older. They have a track record of 3 years or slightly more, 5 years, 7 years. So the major events of the issuer, material acquisitions, divestments they have done, the main object of the issue object of the company for which the company was formed, and what they do exactly forms part of the history and corporate structure. Then the holding company, subsidiary company, joint venture, the awards and accreditations which they have received till now, that forms part of the corporate structure. Then comes the industry and business chapter. So in industry and business chapter, you have to tell briefly about the industry in which you are working, the details of the business, your business model, business strategy, the IPRs you have, the product capacity you are working into, and how the capacity is being utilized. All those things are listed out there. The details of competitors are also listed out there with the broad numbers of broad financial numbers of the competitors as well as of the issuer company. Then comes the capital structure. Capital structure broadly tells about the details of how the capital is built up since incorporation. So you have to tell that who were the subscribers to the MOA, then what capital was allotted to when, and the entire details. So the details of authorized share capital, paid up share capital, promoters build up since incorporation, then the details of securities allotted to the employees under the ESOP scheme, and any shares which have been issued to the persons in last 1 year or in last 3 years or in 18 months need to be disclosed, and the weighted average cost of acquisition is to be disclosed in the DRHP. So that is also one part, and the shareholding pattern of the company, that these are the promoters and these are the public category person, and that is the ESOP pool and the structure thereon. So then comes the promoter and promoter group chapter. So in India, I think more than 95% of the companies have promoter. There are very less companies who are professionally driven, who have no traceable promoters. So the list of promoters who are running the show, who have promoted the company, they may be on the board to run the show, they may not be on the board, but that is to be disclosed here. Those can be individual, those can be entities. And then the list of promoter group basis upon the definition which is there in SEBI ICDR regulations, that on the basis of anyone who is promoter, who all would be forming part in the promoter group needs to be disclosed. Then the basic details of the promoters, their educational qualification, their past experience, in case of body corporate, the brief history, and the changes in the management of those promoter group is to be disclosed. Again, then the disassociation by the promoters in last 3 years need to be disclosed in the DRHP. Then comes the management section. This is also very important because the management, the KMPs are the face of the company. They represent the company on various forums, even to represent before the stock exchanges or SEBI, as the case may be. So the details of directors, KMPs, their qualification, past experience, their shareholding, if any, in the company, any remuneration if they have got, the relationship amongst themselves, and the interest in the company need to be disclosed categorically in the section of DRHP. Then this is the most important section, which is the outstanding litigation. Generally, we have seen in a lot of SME cases, there are no subsidiaries or holding company. It's a very small or similar, very clear structure. So you have to, in those cases also, then you have to disclose the litigations of the issuer company, the directors, the promoters, and the subsidiaries. Specifically on an NSE merged platform, you also have to disclose the litigations of the companies promoted by the promoters. So if I talk about litigation, it captures all criminal proceedings, all actions taken by regulatory authorities and statutory authorities, disciplinary actions, including penalty imposed by SEBI or stock exchanges against the promoter in last 5 years, claims related to direct tax, indirect tax in consolidated manner, other pending litigation as per the materiality policy, which would be, which would be approved by the board in board of directors of the company. So this is very crucial. Then I will touch upon, once your DRHP is ready, then the IPO process is that you're ready with your draft DRHP. You have appointed the intermediaries. Your intermediaries have created the draft DRHP, industry reports, and all the certificates are ready. Then you can prepare your investor presentation, because it is all equally important to have a clear and concise investor presentation, because it will be helpful for your road shows and marketing of the issue once you will get the observation or in principle from the exchanges. So once all these documents are ready, then you appoint the board of directors. So in generally closely held companies, since they are not planning for IPO till that time, there are two. The promoters are only the directors. So as per the provisions of Companies Act, or as per the provision of LODR, the board members and the KMPs need to be appointed. Once those are appointed, the information of the KMPs and board are added in the DRHP sections, and basis upon that, the DRHP is finalized, and the board of directors of the company approves the DRHP, and then the filing is done on the exchanges or SEBI, as the case may be. Post to the filing, of course, there are a lot of question and answers goes on, and then you receive the in principle or the observation letter from the exchanges and SEBI, and basis upon that, the filing of RHP can be done by the company, and you get time frame of 1 year to file RHP once you receive the observation and in principle approval. Then you do the marketing, you do the road shows, and then you launch the IPO, and your IPO your company gets listed and you raise fund. So the timeline for completion of IPO, if I talk about main board, from the day you plan, you start for IPO, to complete and to raise fund, it will take 9 to 12 months. And for SME, it is a comparatively shorter period. It takes 4 to 6 months. So thus, overall, to conclude, it is very much the overall IPO process is very detailed, very exhaustive. The capital market regulator has made a very stringent laws to comply with before you raise fund from public, because it involves the stake of investors. So thus it is very much important for all the agencies to be very vigilant. So the management and the promoters need to appoint the right agency to do all those activities in the overall process. So that is the overall conclusion from my end, sir.
Okay, thank you, Ruchika. Thank you very much for giving in a short period. The topic is very huge, but we have covered. Now, Lokesh and Sachin, your turn. Lokesh, I will start with you. Now, Anjali, Manoj, and Ruchika has talked about the all procedure. Now, you are the regulatory body, you approve things, and first you are getting all the things. So, your advice to the company, those who are coming for public issue and either in IPO or main board or SME, what you suggest corporate, they should not under the impression that anybody is coming and telling them come and bring out issue, and without preparation they have come out and later on they have stuck in this, or some gilly-willy people are coming and telling you some dream they are showing which are far from the reality. So overall message you want to give, and anything and everything relating to public issue you can tell.
Yes. So thank you. I think Richika and already your team has already covered everything about what exchange is doing. So once we get a document, I had a PPT, but I think already the point has been covered. So I'm just discussing and telling us that once the document is covered, come to the exchange, both exchange NSE and BSE. First, they check the company is eligible on exchange portal or not, because there are already additional eligibility criteria which company is required to meet. Once company is eligible, we see that the IPO document has been divided in multiple chapters, various chapters. So one is the risk factor. We see that whether the risk factors are proper or not. What we have been seeing a challenge is that whatever the DRHP which are coming on main board, the quality of document of main board DRHP is much better compared to SME. A lot of to and fro is happening at SME, and reason being the quality of document is not there. Maybe the legal counsels are not there. Maybe the bankers are new. The expertise is not there. The management are more focused on the business. Maybe that was the reason. But what we have seen that the risk factors, the quality of risk factor of main board is much better. We insist companies that the top 10 risk factors should be pertaining to the company, and they should be the pertaining to business of the risk factor. What are the promoter and business related risk factors should be in the top 10. In case of business, I will just share one slide on business. I have this business. Let me know if you can see my screen.
Yeah, please. Your screen is visible.
Yeah. So in business, what we have seen that we, as an exchange, we want that the entire product and services end user, who are the end user of the product, whether it's a white label or a own brand, B2B, B2C, we make sure that the company should disclose that part. So there are a lot of to and fro happening in that part. Then we also insist that the segment revenue should also be given for particular last 3 years. Since the financials are last 3 years restated and whatever the stub period, we ask the companies to give the segment-wise revenue also. And we also insist that at least they should mention something about procurement of raw material and supplier, where they are procuring the raw materials and who are their suppliers. Manufacturing processes also, sometimes we ask them to do the manufacturing processes. Capacity utilization, some companies are giving, some companies are not giving. So multiple times there are a lot of to and fro happening. We always insist companies, they should give us a capacity utilization. So why the capacity utilization is important? When their objective is the capex and your existing capacity is underutilized, then there will be always be a challenge for investor. Then we ask a company to give a risk factor. As an exchange, we cannot tell anything. We can ask only for additional disclosure. So what we tell that you give an additional risk factor, your capacity is currently underutilized, and still you are raising a capex, which is not look good as an investor point of view. And who are their customer? Whether they are doing any RPT, that also we see angle. So if there are a lot of RPT transactions, because we have seen couple of cases in SME where more than 60 and 70% of their transactions are through RPT. So then we tell why you are not restructuring in a company in such a way that you consolidate your company and then you can come and IPO. So that's why all these customer and who are their RPT, they have to give the risk factor on this. Geographical presence, majorly SME business in India. Exports are very less or minimal, but mostly in India. Then we usually mention because sometimes the products are not. So we ask them to give a graded picture of the products, revenue model, how they are revenue generation, how the business is revenue generation. Are they a trading business or they are manufacturing business? Because many times they are a trading company. They mention in such a way that they show that it is a manufacturing company. So what we do, we additionally go and inspect the company. In the sense, we do a site visit where we see the operation of the company, how the company operate, what is the business model, and then we link the business what they have given in the disclosure. And in case if there is a trading company, we clearly mention that we tell the company clearly, you clearly mention the document that you are a trading company. Then how they product and market, and how the transportation, logistic, and all these things are. And additionally, what we make sure that in the document, they cannot use the work they are market leader, prominent, leading player until unless they have a backup. Company cannot mention in their own document they are the leader until unless they have some backup from any credit rating agency or anything. Otherwise, then we ask them to remove this. Similarly, object of issue, SME, usually for SME, what we have seen, there is a working capital object, majorly the working capital object. What we have seen the last 3 year financial and what is the projection, there is a lot of to and fro happening. In the sense, last 3 years, just to give you an hypothetical example, 10 crore is the working capital requirement for FY21. Yeah, FY22, 20 crore is requirement. FY23, 15 crore. FY24, which is the latest financial year, 20 crore. But ask the projection for next 2 years, which is required in, they give 60 crore and 80 crore. Without increasing capacity, there are issues, they don't give any proper reason. Then we ask them to give a proper justification. Many times we told them to withdraw the issue because we are not satisfied. They cannot give a hypothetical number. There should be some justification. The working capital has to be linked with what is there in past. Similarly, if one of the objectives is a repayment of loan, so where they are paying the loan, are they paying to the promoter or are they paying to the banks? If they are paying to banks, the detailed disclosure, we check that what was the purpose of the loan they have taken, and everything has to be disclosed in the offer document. Similarly, if the capex, if the expenditure, if the one of the objectives in capex, earlier we told that we also see that what is the capability utilization. Second thing, capex, the quotation should be valid. As on date of DRSP, the quotation should be valid. You cannot give a backdated quotation and all these quotation expired quotations. Similarly, if one of the object is to setting up a plant, whether they've taken a license or approval, if not, then we ask them to put a risk factor for that. Similarly, investment in the subsidiary company, whenever they invest in the subsidiary company, so usually what we have seen that investment happen in subsidiary company either through equity or debt, which they mention in the document. But what is the ultimate object of a subsidiary company? Where this money will go? Either it will go in capex or working capital. That also we ask them to disclose detail, and we got a lot of to and fro happen. And why they are investing in subsidiary? Because many times we have seen, okay, they are investing in subsidiary because there is some tax exemption. So we ask them why not they set up in their own company. So the reason, proper reasoning should be there. Similarly, risk factor, what numbering of risk factor we see, okay, top 10 risk factor should be important. Whether the quantitative qualification possible, wherever mentioned, any auditor has made and show qualification, material litigation, disciplinary actions, all these related risk factor. Any approval is pending, regulatory approval is pending, that we make sure that it should be there. Banks, dissociation, any promoter is dissociated, auditor qualification. We make sure that top 10 and top 20 risk factors should be clearly pertaining to company, there should not be a additional other risk factor. So this is what, since the time is short, this is what from the NSE side.
Okay, thank you very much, Lokesh. Thank you. Sachin, now from your side, I just want to understand that what is BSC is doing, which Lokesh has mentioned about the NSC. So what is your advice to the corporate and how the people are coming and what specific things stock exchange is looking after? So people should be ready and they should jump with clear mandate and clarity in their documentations. Over to you, Sachin. Anjali, just try his number. Sachin, please unmute yourself. Yeah. Yes, Sachin.
Yeah. Can you hear me now?
Yes, yes.
Yeah. So Lokesh has covered all the things we adopt during the reviewing the documents. We go each and every chapter and content of the document given by the issuer. So Lokesh has covered, but something I need to emphasize, like giving advice at time choosing the BRLM. So they have to be thoughtful that if BRLM is interested, like in the financials or in the share capital of the company, they should not choose because it may delay process by explaining in all this thing and appointing another BRLM. If more than two BRLM are there in the process, then they should not do the due diligence. It should be taken care. Like in capital structure, we have to sure that whatever eligible shares for promoter contribution, it should be properly come out, because some shares are mentioned in the offer document which is coming from the revolution reserves which is not eligible. Then we have to go to and fro, it is not eligible, it will take time. Then in our management chapter, we are taking whether the KMPs, directors, right mix of the independent directors are not there, because many times we are saying that the independent directors they appointed either not qualified or whether we need to comply with the audit committee requirement. So whether they have some financial knowledge or not. So right mix of independent directors should be there so that we should not have much delay in the process, because we raise the questions that the the independent directors not qualified. We raise questions that CFO or company secretary is not rightly qualified, because in one offer document we seen that company secretary appointed was shown as a MCOM.
Sachin, your voice is a bit low. Kindly increase the voice volume a bit.
Just a minute. Is it better now?
Yes, a bit better. Yes.
Yeah. Sorry, because I'm not using my microphone. It is laptops.
Okay, no problem. No problem. Carry on.
Okay. Then in financial statement, not in the main board, but in SME, we are seeing that BRM not taking care of the proper consolidated financials are disclosed. Then we have to go and do for that. We have to change the financials. It will take time again, because auditor again go and restate the consolidated financials. So if these points are taken care before filing the DRHP, like in license approval, Lokesh mentions whether all license and approvals are in place, whether they are valid till date or not. If not valid, where application for renewal is filed or not. We check each and everything. If the pendency are there, either put in the risk factor or we need to change in the this thing, wait for the document. So this need to be taken care. And any other thing we can take care in the question answer session. Hello. Hello.
Yeah, you are audible, Sachin.
Yeah.
You are audible.
Yeah, Sachin,
Yeah.
carry on, carry on.
Yeah. So this thing need to be taken care. Each and every section, whatever we are mentioning in the offer document, we have to take care. Like company secretary in main board, he need not to be worried, because they have experienced merchant bankers, BRLM, as well as the legal advisor. But for SME section, the legal advisor are not there. Merchant bankers are also very new, and responsibility for the compliance officer are the similar. In offer document, whether it is SME or main board, if something is not true, then their liability is similar. So company secretary, compliance officer or need to take care extra caution on the SME document, and we are getting lot of misinformation in the SME document. So I advise for the SME main board offer document, extra caution need to be taken care. And I'm concluding with this thing, and whatever other things we can take care in the question answer session. Thank you.
Okay, thank you very much, Sachin. Because now both the stock exchange are there and the team of merchant banker is here. So let's have a question answer. So what I have received various questions with me before the program and during the program. So what I'm doing, I'm asking these questions from the stock exchanges location, Sachin, and Manoj and Anjali, you can add point. Okay. First question is, what is reverse merger? I think this is out of context. I will come to last when we have time. Does listing of convertible security like OCPRS issued by a company require prior listing of the equity share of the company? If not, whether there are any exemption of such listed convertible securities? So, Manoj, first you give answer, then I will add.
So I think it is talking about the different classes of shares, certain classes which are convertible. So for IPO, you have to bring all the classes into one, and all securities should be converted into, all convertible securities should be converted into equity, other than the ESOP options which are granted to the employees.
Okay, location, Sachin, are you facing this type of thing, or people are coming readily with this?
Yeah, they are coming with the caveat that we have some convertible securities in the cap structure, but they are coming with the undertaking that will convert before filing of the RHP.
Okay. And Lokesh,
Right.
you are also
That is a reasonable ground, because if due to any reason IPO fails, then convertibles should continue for the protection of rights to the investors which are there. So that.
Oh,
that
no, this is interesting point. The first point is that all convertible instruments should be converted in equity. That is one part. And in case IPO is not successful, then it can go back to this.
It cannot go back. So that's why at the time of DRHP, they continue with the convertible instrument with the undertaking that they will convert it before filing the RHP. That is just before the opening of the issue. They will convert into equity, and there will be one class.
But suppose the issue fails.
Yes, so obviously they will. Issue fails, then it is a totally different scenario. But if they are not going ahead with the IPO after getting the in principle approval, then they can continue with the convertible instrument in the balance sheet.
Okay. Anjali, we have issued bonus share to the promoter on 6 June 2024. Can the promoter sell these shares in an issue which is completely offered for sale, or will it be ineligible to sell?
During last 1 year, if the shares have been allotted, he will not be eligible to offer as.
No, ma'am, I think you understood the question wrong. If they are saying they have come out with a bonus share. So if the bonus share have been issued on a capital which is more than 1 year old and eligible for the issue, then these bonus shares can be used for offer for sale, subject to the condition that the bonus was issued by capitalizing the free reserve or security premium account received in cash. So if that conditions are getting fulfilled, then these shares are eligible for offer.
Yeah, that is the question. Anjali has differently.
Right. Okay.
So, Lokesh and Sachin, your view on this?
So, I agree with Manoj. What he said is right. Bonus share, only thing is condition is that the existing share on which the bonus is issued, it should be hold minimum 1 year. It should be capital reserve, free reserve, that security premium. That should be.
Okay. Sachin, you
agreed with the what Manoj said.
Okay. Thanks for the session. Question: what are the list of items to be carefully about or company-wide diagnostic to be carried out even before we focus on due diligence related to financials, secretarial, legal, accounting? The question is more about what is the first step in overall process to pre-IPO due diligence. Ruchika.
Sir, while carrying the pre-IPO diligence, it is essential to, analyze the corporate structure, the capital builder, whether you have the capital builder for promoters contribution, and then the normal legal diligence and financial diligence analysis can be done. So promoters builder is a very crucial thing that needs to be complied with, that every company should have. So I think that is crucial before planning.
Manoj, you want to add anything?
Yeah, so it is always better to get detailed diligence done before formally embarking for IPO, launching the IPO and appointing all the agencies. Because post IPO, as soon as the agencies comes, they want documents and disclosures. So any rectification, any changes in the structure, in the process need to be strengthened beforehand. That is always advisable for going before appointing the formal agencies for IPO.
I think companies' business and industry analysis again plays a very important role before one takes a decision.
Okay, location, Sachin, in your experience, when people are filing document, other things, where is the questions like compliance they can do, something they can do, this business and about the company and the business, are you facing more challenge there, or which are the area do you think that companies are not balancing and giving the proper answer?
The structure, so from NSE point of view, in SAP cases, we are seeing that the structure of a company, the just example that we are showing you, that 80% of revenue is coming from RPT. That is not acceptable. Well, such type of structure should be clear. Whenever you are planning for IPO, you have to clear the structure. You cannot do a transaction with the RPT because ultimately you can consolidate the company and then you can bring an IPO. That would be the ideal situation in which what investor would be happy to do it. So business model is a very important, which before you are thinking for IPO, you have to plan in such a way that your business, entire business should be in one or two, whatever the concept companies, but it should not be RPT, major RPT transactions.
Okay, okay. Sachin, your view?
My view, document side, when you are talking about the capital, financial structure and all this thing. So when you plan for all this thing, BRLM, investor manager take care of this thing. So while you are carrying out this activity, I advise that other due diligence should be run simultaneously. Suppose if you have some non-compliances, then compounding will take time. If you have some approvals or licenses to be taken care, then you have to take care of this thing. If you are going for the capital structure and if you want to take land and all this thing, or you have to take quotations and planning for this thing. So simultaneous due diligence need to be taken care along with the capital and all this thing.
Okay. Friends, I just want to add this point that when you are entering into IPO market, you must understand that this is not something which you can go with non-planned way. So you have to enter into this market not only with planned way, but very structured and very clear thoughts. You cannot have a double answer. You cannot have a, like when you were doing exam in our examination in our professional exam or college days, then the telling of balance sheet, there was a difference of 50 paisa. Even if 50% difference is there, it means there is something wrong somewhere else. Same applies here also. You say that I'm doing this RPT or I'm doing this mistake. The investor thinks when you do this mistake, there may be some wrong thing also. So you have to prepare in overall aspects without any loose thing. So the advice is whenever you are planning for IPO, you are without waiting for legal advisor, merchant banker, your in-house team should start doing due diligence. You can discuss with various people, but your own process that, yes, my compliance is there, my structure is there, my related party transaction should be. Sometime what is happening, we have seen that you have given money to the company as a related party. That is also investor is not taking positively and you are giving without interest. So that is also not positive sometimes because they think that you are doing something like your own shop. So it is better you, when you are going in the public market, you should be professionally managed. Sometimes people are not taking money also and they invest, they say, I will not charge. Then the question comes, from where you are earning, from where you are spending money if you are not charging. So there is a doubt that you are taking money through some other route. So you should be very clearly defined things. normal situation should be there, normal money you are taking, normal salary you are taking, and everything you are doing beyond the arm's length, must do with arm's length relations. So what is the difference in terms of benefit between fixed price book building way of IPO? So this is answer anybody can give. Fixed price versus book building.
I think this is a matter of choice. And obviously, if it is a book built issue, it has larger participation of qualified institutional investors, because in, let's say, there are reservations for them, and if they are not interested, then the issue is failed. So obviously it gives confidence that your business model is robust. You are able to convince the institutional investors who are much more capable than retail investors. So that is the thing for with respect to the book build, and it gives a two extreme valuation. One is which difference may be up to 20%. So let's say the interest of the investor is at the lower end. This shows that the valuation price is at aggressive level. Or if it is getting fulfilled field at the top end, then obviously that you are a reasonably priced issue. So this is the book build issue. And if you are going for a fixed price issue, obviously if you are eligible, there are certain eligibility for which is ICDR part regulation 6 issue. Then in that case, you can come out with fixed price issue, and there is a clarity that your price is predetermined. Everyone knows at what price they are buying the shares. So I think this is the main difference. And most of the public issue, main board public issue, come in under book built issue norm right now.
Okay. So
And in case the company is not meeting with the eligibility requirement for a fixed price issue, the only choice left is QIP. For example, the 15 crore profit track record is not there. So the only option is QIPO. And is the book built.
okay, so you mean to say that there is a criteria for fixed price and the book building, but book building can be anybody can bring. Fixed price when you fulfill the criteria. Is it okay? Now, location, Sachin, what is your experience in the stock exchange when we are receiving? Majority issues are coming, book building issue, or you are finding that fixed price issue is also coming?
Main board only book building come. SME, earlier it was a fixed issue, but often we have seen only book building, because here the company get, or the promoter or company get chance to give two prices between the two prices rather than giving a fixed price. And investor also have an option on bidding the price.
Okay, Sachin.
So normally all main board coming up with the book building and with a liberty that they can negotiate well, or price discovery is proper in fixed price issue. The merchant bankers and BRM discuss and fix the price. It may go well, it may not go well. In book building, the investor can suggest that we are comfortable in investing in this price. So book building is always better in terms of the success of the IPO.
Okay. Manoj, do you think that book building, because it's a QIP portion, which is a tough scrutiny, it's easy because every issue is coming like this. So it has become now simple than fixed price issue. This is not correct.
No, it is not about being simpler. It is always that the merchant banker want to give a leeway or option to the investors or institutional investors to decide the price, to negotiate and determine the right price band, price point over the between the price band for the issue. So that's why they are preferring this book built issue. Many of the companies are obviously like startups. They don't have the option to go for fixed prices because they are not eligible. But most of the eligible companies are also coming out with the book built issue because it gives more confidence to the investors at large.
Okay. Okay. What is the 5% allocation when Anjali ma'am explained allocation of 95 per crore among RII, NII, and QIB, anchor investor, and mutual fund? Anjali.
5% is the market maker, which has to be mandatorily given for a period of 3 years. I think he's talking about the same 5%.
Yes.
Or there is
believe,
allocation, yes. Or there is allocation of 5% to the mutual funds as well out of the QIB portion. Maybe he's talking about there are 2 5% involved. 2 5% involved.
Okay. what is the investor profile of SME exchange? Are these similar, same institutional investor, etc., or as of the main board, or are they specialist funds?
So there is no legal differentiation between the investors for the main board and the SME IPO. However, the SEBI has put a protection that for SME the minimum lot size will be of value 1 lakh rupees, and that's why there is a different lot size for the issue also. And later on also trading can happen in 1 lakh or more. So that's why they don't want small shareholders investing 10,000 rupees or 15,000 rupees to come in SME board. They should come to the companies which are big coming in the main board only. So that is the difference. Other than that, because of their own mandate, many big institutional investor would not come in the SME board. They have certain thresholds, and they will not be able to come to the lower band. Hence, most of the anchors are smaller anchors who participate in the SME board. Then there are a whole lot of HNIs or individual family offices who participate in the SME board. In main board, all kinds of people take part in the IPOs.
So location, Sachin, when you are getting a prospectus and the merchant banker is coming and then you are seeing the profile of the investor, are you finding the difference that one set is for main IPO and other set of people are for the SME IPO? The investors are totally different.
No, now we have seen the HNI investors are investing, which were earlier investing in main board. Now they started investing in the SME also.
Yeah.
Similarly, some institutional investors have also started. I understand what Manoj is saying. There is a ticket size because usually SME IPO size is only 20 crore, 30 crore, 40 crore. Whereas some mutual fund have a minimum ticket size that they invest.
Yeah.
So that's otherwise there are institutional investors that are investing in the SME companies.
Yes. So as Anjali was also telling, Anjali, that there is a 5% allocation made for QIB mutual funds in QIB portion of SMEs, but generally they do not get fulfilled because of this restriction of their internal mandate, and hence they are allocated to other anchor investors, which are also qualified institutional investors, and they are eligible. They want to put money into that company, SME companies.
Sachin, your experience?
Mid-size funds, HNI, all are investment, and SEBI has taken care that the very small investors who cannot take a decision on the basis of the offer document or who has capacity to read the document because they are investing a larger amount like 1 lakh, 2 lakh rupees in the IPO application, unlikely to the main board where 15,000 is a lot. So they are taking care because companies existence or all this thing is not known, so they want to protect the small investors, and big investors like institutional investors not coming due to their limitations. So mid-size investors are investing in the SME.
Okay. What is the minimum turnover requirement for SME IPO? Locations, Sachin.
This we are still searching because we have seen a company with 5 crore turnover is coming with IPO.
Yeah.
So
1 crore turnover, 1.5 crore turnover companies also filed the offer document for the SME IPO.
So in a way, if you see this, anybody who has a 1 crore turnover or 5 crore turnover, anybody can file and anybody can bring. But the cost of issue will be very high in that case because your size will be less, your valuation will be less. So Manoj, what is the minimum valuation company can bring out issue?
Sir, valuation, actually SME board is made for small size companies only, and the government want to promote those and make it an alternate of angel investment or crowdfunding. So there can be very small companies also which can go for SME IPO, or alternatively ITP platform is also there, which is even for a smaller size companies. So there is no minimum threshold. Only other eligibility criteria, as discussed by Anjali, should be fulfilled. If they are getting fulfilled, they can come out with the IPO in SME board, any of the SME board. And if they are good, they can raise money. Obviously, the cost aspect would be important because there are certain fixed costs which will come in any case, and that will be in case of 2 crore issue, let's say 40 lakh rupees is the fixed cost, then it will be much higher in percentage term. So that is the only challenge, I think.
Okay.
So Pawanji, when you are given initial remarks, you said that main board IPO are costly and SME IPO is less costly. So in terms of amount, yes, true. But in terms of percentage of issue size,
Yes.
SME IPO is more costly.
Yeah.
Yes. Yeah, you're right. You're right. Okay. Shiva, as Manoj requested, please help with response question. What are the list of items you consider for company-wide diagnostic to carry it out even for due diligence? So you share with him. Shiva, you can contact Manoj. He will share with you.
Yeah, so detail, I think briefly I have covered all the things in the presentation, which will be available, but we can discuss in detail.
Okay. The query is whether one convertible security be listed when the equity share of such company are not listed. Yes, that is possible. That is possible, and so many the stock exchange are allowing that your equity is not listed, but you want to list your any securities, you can list it. Am I right, Lakesh? Yeah.
Sir, he's talking about convertible securities.
Convertible security is not possible.
Listed convertible security until unless equity is not listed.
Equity is listed, yes. I think here is a difference. Debt instrument can be listed without listing of IPO
Without
equity,
yeah.
but convertible instrument cannot be listed unless equity is listed.
Convertible security converting to equity cannot be listed. Yes.
Yes.
Okay. What can I get a PPT? We can send it to you, Jitendra. Whether company can raise money through IPO for the repayment of promoters' unsecured loan, how it will taken by the exchange or any other comments on it. Anjali, then I will ask location, Sachin. I want to return my promoters' unsecured loan. That's why I'm bringing out IPO. How you will see, market will see, investor will see, and stock exchange will see.
Ethically, governance point of view should not be there. But law tells that you have to make all the disclosures. Schedule 6 says you have to give all the disclosures. There should be a proper agreement. There should be all details and what was the purpose of the loan, what was the interest rate. But ethically, it should not be there.
Sachin, when you are receiving this type of proposal, what you will do?
We don't see the ethically, we see what were the requirement, because many times when others are not giving the fund and promoters is taking risk in running the business. But yes, we see whether all the documents, loan agreements, terms and conditions are in place, interest rate is okay, and genuine transaction happened. So we ensure this thing. If all these things are in place, we don't see the ethical angle. But yes, requirement, because many times other are not giving the fund and promoter taking risk on bringing the business up.
I do agree with Sachin. I fully agree. There may be situations in the initial stage, there will maybe that it is difficult to raise fund from lenders also or third party. So promoter has to put unsecured loan or otherwise, and if it is properly accounted for, there is proper documentation and it can be proved, then I don't think it is a challenge, because ICDR itself provides utilization of fund, and if it is repayment of loan to promoter, what all disclosure need to be made, that is clearly mentioned. So there is no question. It is only about the transparency and disclosure.
Okay, Lokesh, you see differently, or what Sachin and Manoj saying?
Same. I agree with Sachin and Manoj.
So point is that you give disclosure and you give proper logic, things can be.
And what we additionally ask that you respect that the money which you are raising will not be will be repayment of the promoter loan. Yes. That also we ask company additional care. You give a respecter. Yes. This is disclosure regime.
Yes. So proper disclosure and risk factor may be sufficient if they are able to satisfy the exchange that the money was properly came into the company and utilized properly.
Okay. In case of the promoter shareholding is reduced prior to the IPO, can the shareholding pre-IPO be eligible in the minimum promoter shareholding?
The specific timeline is given. Eligible share categories for promoters' contribution is there. So if they are fulfilling those conditionalities, then anyone can be part of the promoter group or lend their share. A specific category of investors can lend their share for promoters' contribution up to 10%, which is basically FVCI, AIF, etc. If they are putting the money and they are agreeing to lock in larger lock in, then those shares can be eligible up to 10%.
Okay, I'm receiving continuous question and time is over. So it's a rapid round. So I'm not asking everybody. I will ask one question, and anybody has different view, then please tell us. Our one audit committee is having company secretary as audit committee chairperson. Can exchange object to this?
This we
So
have to see.
This is a case to case. This is a case to case question.
but how the audit committee chairman can be company secretary when you mentioned the audit committee chairman will be
He can
director?
be. He's also
If they,
Director.
if he is a board member and he is
Yes.
obviously made chairman, then why not?
Yeah. So he should be
Qualification
the
is
board
not a
member.
deterrent to become a chairman.
In respect to stamp duty on issue of equity shares, the payment is made online. In this connection, whether we use the state government portal in which registered office is situated or central government portal, which is in turn remits to the concerned state government.
I think, though I am not expert of this, but practically I think NSDL and CDSL are authorized to collect the money,
Yeah.
stamp duty, and deposit to the respective government.
Okay.
So it is not your or our choice.
Okay, why issue fails even when every aspects, including risk factor, financial, legal, compliance, are checked by agencies? Anybody is responsible for the failure of the IPO. So,
though at present not many issues get failed, and specifically in case of SME IPO, because it is 100% underwritten, so there is very less chance of getting failed. But yes, there may be various reasons. There may be a disruption in the business.
you have a decade-old experience in the stock exchange. Have you seen any issue which is failed?
There are they are under listed in the sense whatever the issue price they have given, they have listed below. I don't want to quote the name of the companies, but there are cases. It all depends on pricing, demand and supply. Ultimately, it's a game on demand and supply. How much companies are offering, how much investors are ready to buy. It all come on that, and it all upon how management are driven the company.
Yeah.
Okay.
So
Okay.
it is not about failure. Yes, low price
timing of
opening can
opening.
happen, low price movement can happen, but generally failing or return of the issue is very rare.
Okay,
Right.
Sachin, you were saying something?
One more thing we can add: the sentiment at the time of issue is opened.
Okay.
All things are well, but sentiment are not negative, then issue can fail.
Okay. Okay. Sir, KPI, key performance indicator in DRHP are also great inputs to prospective investor. Is it not? Answer is yes.
Yes.
Okay. Is there any similar cap on IPO listing price as imposed by NSE 90% for SME for the BSC? Lokesh, your view.
Lokesh has already, I think it is.
They have imposed.
Yes,
They have imposed 90% upside.
So now NSE has imposed. Is it applicable to BSC also or
No, 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 no.
BSC?
No. Until unless our management approve all this thing, it will not be applicable for the BSc.
Okay. What is book building process? We have already explained. Market maker. Manoj, market maker just explained.
Yeah, so only in case of SME IPOs, it is mandatory to allocate at least 5% of the issue to a market maker which is registered with SEBI, and they are required to subscribe to this 5% and fulfill the obligation for a period of 3 years. A market making obligation. So the market making obligation obviously is a bit complicated for layman to understand, but brokers know the game, and they understand they have to provide liquidity whenever there is a demand and no supply, or supply or no demand. So they have to buy or sell shares so that at least minimum liquidity is available in the market.
Okay.
And it is mandatory only for SME IPOs.
Anjali, Megha Goel again has asked the question of 5%. Just reply to her through chat. Okay.
I'll do that.
Time is left. Mr. Kishore has mentioned excellent seminar. Kudos to sir. Other speaker also deserve great appreciation. All the best for the team. I think this seminar is served as a practice session for the team and learning session for the participant. This is true way to firm has to be planned and knowledge accumulation and dissemination. Thank you very much, Dr. Kishore. What is the typical cost of the SME IPO? Manoj?
As I think Sachin was telling, the cost of SME IPO in percentage term is quite significant because the size of the issue is smaller. So there are certain fixed costs which will happen. Then there will be issue and underwriting cost. There will be market selling and distribution cost, advertisement costs, etc. So in percentage term, it can go to maybe in the range of 14-15%. In normal
15 to 20%. Yeah.
Sometimes if very small, then it may go to 20% also.
Yeah.
Okay. Whether again the same question has come, whether company want to raise money to repay the unsecured promoter loan. We have already explained. and stock exchange has no problem if you properly disclose and everything is in the system. There is no restriction and bar on this, but you have to explain properly that how this money, this loan has created. For SME IPO, first we have to convert private company to public. Yes. Can we get the PPT of the discussion? Yes, we will send it to you. Okay. And can also be held more of such seminar in detail with regard to the FP or I2C. Yes, we are doing continuously. Please look into this. In case of 40 years old company, no capital buildup of promoter cannot be ascertained. What is the remedy? I think this.
There is no identified promoters. Obviously, we can come out with the IPO without identified promoter. That is allowed, but we have to explain it very well, especially in case of SME IPO. Obviously, exchanges would be more inclined to have at least one promoter to have skin in the game.
To identify that he is a promoter or not, it's a tough question. But I am not the promoter. That is the toughest question to prove this. So you have to.
I understand the question is he's asking about the promoter's capital is not built up.
Yes.
So,
yes.
Answer is that whether he has paid the initial subscription amount or certain amount for the as a capital for running the business, and if their reserves and surplus are well positioned, they can use that reserve surplus to build up the promoter's capital.
Okay. Abhishek mentioned very informative and interactive session. Thanks for organizing this. If the demat share are wrongly credited and mismatched with the original share certificate and SH4, then how we can do due diligence, the process, and what to do in such situation?
I think this NSE, BSE people can be better.
So
there may be practical difficulties in some cases. Yes.
So how you are doing?
IPO are not in the picture.
Okay, so now the friends, you have to check and correct. You cannot go with the difference in the shareholding and share certificate difference. Mismatch cannot be allowed.
Mismatch is not allowed. Obviously, there may be certain situation where, like for old companies, before 2006, public data is not available, and so we have to. That kind of practical problem may be there. Like incorporation happened in 72, and MCA data is available from 2006. Corporate data is also due to certain reason not available between that period. So there may be certain difficulty.
Okay.
We will have to add a risk factor to that
yes,
effect.
that is the right way to do, but to the extent possible, capital built up should be sacrosanct. That is the important.
So Manoj, first you have to try to find out.
Yes.
Then you have to take the certificate where the clearly differentiation should be there, because you cannot take advantage in future.
Yes.
Why it was not matching? So what was not matching is not clear. Yes. So the difference is there, and then you have to disclose properly in the risk factor. Please arrange session for reverse merger. Yes, we will do it. Thank you for the webinar. Okay. When is the apt time to apply for ISIN? Should we do it after conversion from private to public?
You have to, as per Rule 9A of Companies Act, you have to do it for every public limited company as well.
Okay.
ISIN, yeah.
Can share be offered at a discount to anchor investors?
No.
Okay.
No.
Can a person related to promoter group subscribe in IPO?
Public at large, yes, anyone can subscribe, but if they will be part of the promoter group, then their holding will not be counted toward 25% public holding. So that is a challenge.
Okay.
In practicality, the promoters give the PAN numbers of all the promoter group related people to the RTA, and in case any of them applies, they are automatically cancelled.
Okay. So friends, thank you very much. We have given all answer of 25 questions which we have received, and then we have discussed. The point is, this IPO market is very interesting. IPO is another offshoot of creating capital, because you cannot depend upon the bank, and in every situation in Indian bank, they are very traditional, so you cannot get fund also. And you have to, if your business is totally different, then it's a problem. That's why startup and the new equity cult has created through the PE fund. But now the SME market and IPO market, they are recognizing, and they are a specialized investor. They are encouraging and they are recognizing your efforts. You just see all the companies issue of PV, the Zomato, all were in losses, but investor has a faith. They have invested money, and because of this reason, the company is growing today. So, with this, this is a good market. Preparation should be there. In India, only 5,000 companies are listed. Earlier, we have 10,000 companies. So you can understand either earlier market was more ready than this market. So we have to work out. Only thing is difference is today when you are going for market, you have to be more governed, more disclosure, and more disciplined. SEBI and stock exchange is very tough. They are not allowing any hanky-panky promoter, hanky-panky things. So you should prepare. Market is good, economy is good. You should not bother that 80,000 index has reached. So that's why there's no scope. The scope is always there. The country is growing. Everything is if you see the property rate, that is also going. Gold rate, this is also going. So this is normal phenomena when index is also going up, and this will continue. And if you have a good business, you have a good appetite to understand and face the investor, then IPO is the best route. So as a ritual, I'll just start with Lokesh. We are closing remark for half a minute. That what you give a final advice to the future aspirant of IPO market.
So in fact, what we have seen that this is a boom market in the sense last 1 year on NSE, almost 138 companies have been listed. The data that you have shown. Last 10, if you talk about last 10 years, 2012, the SME market came till 2000, all these 12 years, almost 300 companies have got listed. But in last 1 year, so there is a big boom in the SME market. The market investors have now recognized people are ready to invest. You see the subscription level, you see the listing price. There is a big demand on the SME segment.
Okay, Sachin.
So closing remark in terms of yes, market is ready for your growth. Come prepared, come with transparency, and with the clear intent, you will get benefit of this market.
Okay, Anjali.
Before giving the concluding remarks, a big thanks to both Sachin and Lokesh for giving such an insightful session on the exchange's expectations. For the people who are planning to come out with a IPO, one has to understand that once on this track, we cannot go back. And listing brings along a lot of responsibility as well. The number of family members that you will have post listing will be in thousands, who have to be regularly and correctly informed and kept fed all the time. So we have to take this decision with all the preparation and with every thing in place.
Okay, Manoj.
Yeah, so as we are discussing, obviously equity market is booming. So equity, this IPO, SME IPO specifically has made it easier for smaller companies which were struggling to get money through private equity or venture capital to directly go for IPO. So they are jumping 2-3 steps and directly coming in the public domain. And within 3 years, they may go to main board, and then a lot of new ways to raise fund will be there. So obviously it is a very good opportunity, and India is growing. So there will be demand, there will be fund in the market, savings are there. So this market will continue to grow for, we believe that's for certain years. So I think this is a right opportunity for entrepreneurs to embark for this journey. Obviously we have to get ready for this disclosure and transparency, good governance. If they are meeting this criteria, then listing market is always good for them.
Ruchika, last.
Sir, I would sum up with 3 words for the companies: be wise, be reasonable, and be responsible. Because wise, that when you have to go for IPO, take wise decision. Reasonable, about the valuation at which you are coming out with IPO, and responsible because you have to take care of the investors fund and you have to give them growth in future. So these are the three sound for the companies.
So thank you very much. Thank you, Lokesh, Sachin, for your valuable contribution. No doubt, when a stock exchange or regulator comes, it's added authenticity for discussion. And what they are saying, it's a word by word. It has some different meaning. So thanks, both of you. We will continually trouble you for doing this. And friends, for you have come, I think Lokesh has come second time. So this is our 179th webinar. And we are doing webinars, sharing knowledge, as well as we are doing the poll also. So your readiness, do you find most challenging eligibility criteria, financial analysis, corporate restructuring, due diligence, governance? So people are saying due diligence is the challenging things.
Challenging thing.
Yeah. Then what is the primary reason your company is considering for IPO? Raising capital for expansion, majority, increasing company's visibility and credibility, that is 16. Providing liquidity for shareholder, that is another. Good analysis has come out in this expansion. What is the biggest concern about going public? Regulatory compliance and costs, that is most important. Market volatility, that is not in our hand. If you go for IPO, just leave everything on the market. Maintaining control and decision-making power, yes, that is there. But you have to compromise on this. Meeting financial performance expectation, that is also another. So these all three polls which we have done, it's really right pointer which you have sent, and we will share with you location, Sachin. It will be useful for you for understanding this. So friends, it's a time to say goodbye, and we are closing our session. We have already overshoot because more and more questions were there and topic was big. And I'm realizing that SME and main board IPO, we should have a separate program because both have a different types of things. And we'll try to do next program on specifically on SME IPO, and then we'll do for main IPO. So friends, this journey of knowledge sharing will continue. And our next webinar on 180th webinar, that is on recommendation for harmonization in ICDR and LODR regulation. SEBI has come out with concept paper, and that is a very big concept paper which has come out. So many things they are talking. We will organize this program on 12th July, 4 p.m. We will again meet and we will discuss threadware, what SEBI is proposing, what is the impact, and how we can suggest modification. Till that time, say good night, goodbye. Thank you very much.
Thank you, Pawanji.
Thank you.